Good morning, traders. It's Thursday, August 1st. Taking a look at the charts, equities are positive this morning. We do have stocks up, bonds up, dollars up, gold's up, silver's up, the oil is up. So we are definitely seeing money flow more or less into assets across the board. People are moving from cash into potential ways to make money. If we take a look at the markets, we had a very strong pop there yesterday. In the equities market, we saw all stocks really pop and rally. Technology had a huge move to the upside. If we take a look at XLK sector, you can see the power there. Doesn't look like much, but remember it closed way down here the previous day, gapped way higher, and then continued to muscle its way up. And actually, if we look at the SPY, I showed this in the afternoon update, that we are seeing the stock market start to push into this overbought territory. We are technically in a downtrend, a short-term downtrend, and from our CGS strategy, a longer-term downtrend, which is why we have this red bars here, and we have SS, which stands for sell short. We had one over here as well, where the market went from green bars, it got oversold, momentum stalled out, and it went orange, which is a sell short. And of course, we have seen the market move down. Yesterday, big gap to the upside, muscled its way up. We also saw some FOMO where money was flowing into the stock market. Typically, when we see this get above our blue line, our reading of 3, we tend to see the market start to stall out and have some type of pullback. I wouldn't give a lot of value to this right now because this FOMO or panic buying and panic selling indicator here have been very out of whack over the past couple of weeks, with money flowing out of the Magnificent Seven, which are high valued stocks, and then piling into small cap stocks, which are low value shares. So we have a lot of money being sold from the large expensive shares, and then a lot of buying. A lot more shares need to be bought of the small caps, throwing these ratios out of whack. So again, the market is haywire, hence the reason our strategy has gone to cash. We want to just sit on the sidelines, let the market figure out what it's going to do, and then kind of go from there. Now, a longer term view, the weekly chart of the trend here using our technical investor, we're actually starting right here. We're really just as of like this week, you can't see it here, but behind the scenes, we are seeing the market start to break down. We are I would argue we are somewhere like right here, or we are somewhere kind of like right here, that the market internals are breaking down from a longer term standpoint. So we could be getting closer to going into a bearish phase. If we look at it from a CGS strategy standpoint, we could start to get into some chop where we have potentially a losing trade or two. They're generally fairly small percentage-wise, but we could get into a bit more of a choppy market as it kind of flips and tries to reverse trend, and we go from a rising tide environment to a falling tide environment, and we'll see how that unfolds going forward here. If we go and take a look at the rest of the market, let's take a look at bonds real quick here. We do have bonds up fairly significantly this morning, up about 1%. Let's just zoom out and get a bigger picture. In the grand scheme of things, they're popping and squeezing to the upside. We'll see if this holds. Again, there was a lot of news out yesterday in the Fed and all that stuff, so it's going to create a surge of people rebalancing based on that data. So I wouldn't give any real move from yesterday and even today a whole lot of credit. We do need to just let the dust settle, let the algos and everybody who bases everything on data, fundamental data, rates and all that stuff, do their thing, reposition, which takes a day or 2 or 3. And then we'll see where the dust actually settles. A lot of times on news, whichever direction it goes on news, it usually reverses and goes the opposite direction by the end of the day or within 3 days. So it'll be interesting to see how this actually plays out. If we go and take a look at the dollar index had a pretty good pullback the other day, regained a little bit of that so far today. It's kind of, in the grand scheme of things, the dollar is a pretty ugly chart. It's just trading sideways, trying to build a base to see if it'll go higher. We do have gold up 1% today. We're seeing a very strong move. Gold futures are pushing up to new all-time highs. which is a pretty exciting to see, which is no surprise. We are expecting 2650 to 2750 for gold. So nothing there has actually changed in the reality of things. Silver, obviously a lot more volatile, but it's starting to find a bid and bounce higher. And of course, it's had a big run up. It's got a big flag. We'll see if it'll get some traction to the upside and start to break out at some point. Usually it's a little delayed. I find silver, gold tends to move first in a lot of cases like this. And then we see silver play catch up, and then it blows gold out of the water in terms of percentage gains. But silver can be delayed in terms of its breakout. If we look at gold miners, they are set to move up. They had a very nice run yesterday. They're set to open relatively flat so far this morning. They were trading actually sharply lower earlier this morning, but they have regained that, and we'll see if they start to expand and start to move higher as well. If we take a look over at crude oil, up 0.8%. Again, it's kind of in this pattern here. If we were to just kind of look at this overall pattern, really roughly, we've got this kind of rising wedge. It's bounced off that support level we talked about. It was oversold down at a support level. It's had a knee-jerk reaction bounce, and we'll see how that unfolds. Obviously, we've got a falling trend line narrowing into the apex of this pattern, which I'm not a fan of. When price does this, we just kind of let it figure itself out and do its thing. All right, I just want to remind everybody that if you like the videos I'm sharing here on my YouTube channel, to go to my website. If you want to invest in a way where you've got minimal drawdowns, you don't have to ride the roller coaster, you just want to follow the exact trades I do with my own portfolio, you come to my website, thetechnicaltraders.com, and you can copy my trades. I trade ETFs only. If we take a look at the strategy, year to date, we're actually up over 10.75% in terms of the market for this year. We just closed out some trades in the last week, so we're going to update this, but you can see how we've performed versus the SP 500. So we're keeping pace with it. Over the long run, we have definitely annihilated the SP 500, and the buy and hold portfolio definitely struggling and lagging. Key benefit of managing positions is our drawdowns. Our worst drawdown was less than 6% versus this SP 500 in the buy and hold. And if you want to take a look and see visual what our account looks like, it just continues to inch its way higher. No matter which way the market goes, a 2008 financial crisis, 2022 bear market, we continue. This will be pushing higher again once we update this fact sheet. But overall, we continue to outperform simply because we only hold assets going up in value, and we sit on the sidelines when the market is not favorable. Talked about this a couple of days ago. I posted an afternoon update looking at this chart. Let me just make it a little bigger here. We pulled up this chart and I said this washout low here where we saw panic selling. We saw everybody get flushed out of this wave where the market ran up and then it came sideways and then it squeezed up again near the highs and then it started to chop around and then flushed down where people finally gave up and it kind of broke that low and everybody bailed out of NVDA. We've seen something very similar to that again. We had the run up, came down, traded sideways, it ground its way higher, and then it started to work its way down and it broke this low and it's picked up speed. And then we saw a pretty good washout low with some pretty big volume there yesterday. I talked about how that looks like, or 2 days ago, sorry, a washout low and a 12% move, 12.5% in NVIDIA yesterday on that bounce. That really is just kind of like a signature kind of washout type of move. I mentioned, I think yesterday somewhere, I don't know where I did, that typically wherever you'd put your stop for a play is a spot where you can naturally put your entry price. So if you want to get into something, you'll be amazed that if you actually put your entry order at the stop price you would have used, you'll actually get a fill. So you would have got filled somewhere in one of these areas here. There was a spike low right here from this bar. So you could have had literally, I'm not saying we're trading this by any means, but you would say if it breaks this low, I definitely want to get out because it's going to be bombs away. And so that's where there'd be a lot of stops set from this very strong pivot low. And this was a reversal candle. It should technically, this should be a strong sign going forward. And so you'd say, oh, well, I get in right now and this should go higher if that is a reversal, a bottoming candle. But my stop will be if it breaks that low, get me out. And so that is what happened yesterday. It came down, broke that spike low, flushed out. That's where everybody's stops were. And that's where an entry price could have been put in. And then, of course, it rebounded 12% in one day. So it just goes to show the power of washout lows and, understanding where people are going to bail on a trade. And when they bail, it's usually when, you're the one catching their shares that they're dumping into. And during that emotional state anyway. Let's go take a look. I don't think we really have much more to look at this point. We'll see how things unfold going forward. But again, the long-term picture is slowly starting to run out of steam behind the scenes. It could recover here in a week or two, and we could be off to the races. But it is showing signs that we are in the late stages now, of a bigger pullback. It doesn't mean we're going that way. Doesn't mean you buy put options. Doesn't mean you buy triple leverage ETFs. I'm just saying the momentum is running out. I'm trying to mentally prepare everyone that we might have a few smaller trades that are short-lived, that are small losses. It's part of trading, part of investing. And that's just the way it is. And eventually we'll get back into having some of these small little wins that happen over and over. And of course, we'll be playing as the markets go red, we'll be in something else generating us money. Could be bonds, could be the dollar, could be bill. We'll have to see what the opportunity is when that time comes. So just be prepared. Eventually, we're going to take a loss. We're going to see markets pull back in terms of our index trades and things like that. Anyways, that's it for now. Take care. Bye-bye.